anything that stood out for you from what David Solomon told Bloomberg's Tom McKenzie on the U.S. economy or other?
I have to start by saying that...
you like the spinning?
Well, I certainly like the spinning, but having followed David Solomon for the better part of a decade, or at least the last 10 years, at least his public life at Goldman Sachs since he became co-president, then the CEO, it just feels like he is in the most relaxed, engaging, non-defensive phase of his life. Those would not have been terms you would have associated with David Solomon 5 years back, 3 years back, or even 2 years back. I have to assume that the Goldman Sachs stock at $800 a share probably has a lot to do with that. When he took over, it was around 200. It was a little bit of a circuitous route to get here.
Yeah.
If we remember
there was a period, right, where we talked about his future, his tenure.
Mostly, I would say that it was a Goldman senior partner class that was constantly talking about his future, his tenure, their unhappiness with the place and the consumer banking misadventure. But to their credit, they acknowledged the mistake. David Solomon acknowledged that it wasn't working, cut his losses, and went back to focusing on the things that really work well for Goldman Sachs. And the results are there for everyone to see. This year, the stock's up 40%. It's one of the best performers in the last year, the last 3 years, the last 5 years. It is doing well. And that perhaps is playing a huge role in Mr. Solomon's outward-facing personality. But also look at the underlying commentary from him out in Italy. He talks about the banking environment. He talks about resilience in the U.S. economy. When we talk about pickup in deal-making activity, it is already running hot relative to last year, but most of that gain is coming in the North America. According to our numbers, you've seen a roughly 39% year-over-year increase in deals that have been announced. When you think about mega cap deals, and this is a stat that he threw out there, David Solomon, when you think about mega cap deals that are deals bigger than $10 billion, that is Goldman's sweet spot. Those deals are up 100% year over year. And the reason it's Goldman's sweet spot is any company that's thinking about doing a big transformative deal, management would never go wrong, even if the deal goes bust. If they showed up in court, or if they showed up in front of anyone trying to look into why they made such a decision, if they were to raise their hand and said, well, we hired Goldman Sachs to do it because they have the reputation of being the best in the business. And in that segment of the market that's doing so well, it obviously helps Goldman Sachs. So their investment banking performance is great. Volatile markets and generally markets heading up are good for the Goldman trading business. And in the asset management space, they're doing well. So out and out, good year for Goldman Sachs so far.
We're going to hear, as Carol mentioned, from Goldman, JP Morgan, and Wells Fargo on October 14th. Those banks and other competitors to Goldman Sachs. What is Goldman Sachs doing better or has done better? And how have they done it over the last 3 to 5 years?
The key themes in market, the things that have really worked, play to Goldman's strength, right? And they have focused their effort around their investment bank, which involves deal making and the trading businesses, and around the asset management businesses. And these are things where we talk about these trends in the market out there. The biggest players, it's the best in the business. Every business is going to sort of consolidate around the top 5 to 10 players. There might be way too many players out there, especially if you think about the asset management space, and there will be a little bit of a shakeout. Losers will have to, shut down perhaps and fade away. But for players like Goldman Sachs, Blackstone, Apollo, Carlyle, KKR, if you're thinking in the asset management space, BlackRock, they're going to continue to do well. And when you think about an improving deal-making environment and a trading environment where everyone's doing well, Goldman is always going to be part of the mix. And that's why you're seeing it reflected in the stock market as well.
All right, so we kind of teased and kidded that there might be a firm that folks like David Solomon might be watching in the financial sector. And are they? I'm not sure if they technically are on Wall Street. It's not a firm we talk about a lot, although a couple years ago we talked about it a lot in regard to crypto and Samuel Bankman-Fried. This is an incredible story that you wrote, and it's been among the most read on the Bloomberg. Tell us about the individual at Jane Street that is just kind of hitting it out of the park.
Right. For our viewers and listeners, you're obviously talking about Rob Granieri, the last remaining founder at Jane Street. Jane Street has obviously been in the news quite a bit. And you're right, about a year or two ago, this firm was really best known as being this early launch pad for Sam Bankman-Fried's career. Of course, Sam Bankman-Fried then went on to become this global crypto wonder king, now in prison. That's not really great PR for the firm. But when it comes to the plumbing of markets, and again, Jane Street is part of this core group of firms that have sprung up in the last 20 to 30 years in concert with the electronification of markets, in concert with the embrace of exchange-traded funds, the ETF market, that have been able to benefit from their expansive use of technology and technological resources in a way that they are out there outperforming the banks. And part of that reason is capital constraints for the big banks has also forced them to pull out of certain sections of the market, leaving voids where Citadel Securities and Hudson River Trading and Jane Street and the Susquehannas of the world have jumped in. But no one seems to be doing it better than Jane Street. And the numbers are quite stark. 2016, yeah.
Let's pull up the numbers for those who are watching on TV and YouTube and Bloomberg Originals. For those on radio, walk us through, Sri, because there's a chart in this story about Jane Street by the numbers, but it in particular looks at the second quarter trading revenue numbers.
Second quarter trading revenues, Jane Street, $10.1 billion. This is the first time ever that they have done better than every other major Wall Street bank and every other competitor that they have in their space. They're much better than Citadel and Hudson River Trading.
I mean, JP Morgan at $8.9 billion.
Yeah, 8.9. That is fortress America when it comes to the biggest US banks. That is Jamie Dimon's bank, and they're doing better than them. That is pretty extraordinary. This has also been a rough year for Jane Street. Let's not gloss over that. The fact that they've been accused in India of goosing the world's largest options market. So they have to deal with that as well. And they're vowed to fight those claims. But while they're dealing with that, there is no denying the numbers they've been putting up. And that's why we decided to focus on the last remaining founder of that firm right now.